Stocks slide as tensions between India and Pakistan escalate. Defense sector players see their scripts perk up in a sea of red.
Titan brings a margin surprise, powering the stock up. It also announces Ajay Chawla, who hems the jewellery business, as the successor to current MD C.K. Venkatraman in January 2026.
Larsen & Toubro misses estimates on operating performance but guides for strong order inflows in FY26 on a high base of FY25, powering the stock up. Margins too are expected to expand.
India responds strongly to Pakistan's aerial attacks on several locations in northern India. And while many hope for a de-escalation of tensions, the nation remains on high alert and ready to retaliate.
Hello and welcome to Halftime Report, live from the CNBC-TV18 Motilal Oswal studio. I'm Ekta Batra. With me is Mangalam Malu. Well, it's definitely a tense session, but we do have a lot of numbers to reckon with. It is earnings season, and in fact, Asian Paints reported what was a weak set of Q4 numbers, with revenue down around 4.3% year-on-year and profit declining 45%. EBITDA also fell 15%. Domestic volume growth also showed some weakness. To talk more about the numbers, we have with us Amit Singhal, who's the MD and CEO at Asian Paints, joining in. Mr. Singhal, thanks very much for taking the time out. If you could just start with, what's your strategy to revive category growth and volume growth?
So overall, when we look at the environment, I think the areas which we are working very clearly, one, we are looking at the entire area of mid-level to luxury housing in a very big way, where, the Asian Paints strengths of premium to luxury is very, very strong. And this kind of cuts across various segments, whether it is from a point of view of emulsions, waterproofing, construction chemicals, or from a point of view of wood finishes. So that is one big area of focus in terms of what we are taking in terms of what can be different and how we can really reinvigorate the category by bringing in more exciting propositions, looking at innovations which can come in that zone, first of all. The second area which we are working is in terms of looking at giving an edge to all our services. We have a beautiful painting services which we offer in terms of reaching out directly to the customer. We also have services for the overall projects in terms of a total assured service which we give. We are looking at amping all the services, given the fact that we feel that in the coming environment, services can really give you a very distinct kind of a flavor of growth in terms of what can be, and it would be also something different from what competition is offering. The third area which we are looking very strongly is the amping up the whole area of industrial paints, where auto and auto OE would be a very big focus in terms of what we want to kind of take, along with the areas of protective paints and powder coatings in terms of which we want to kind of focus. Currently for us, it's a small segment. It's something which we want to kind of grow big overall to that extent, given the trends which are very clear that the industrial paints seem to be kind of doing better for the last about 1.5 years in terms of what we are seeing. And that is why I think a clear focus which kind of comes in that area. And the last area is in terms of looking at really, getting strongly onto the emotional bandwagon of, the Asian Paints Connect with the consumer, where we've already kind of launched some very, very strong, communications right now, which is based on the customer connect, which is based in terms of our larger presence, which is based on our quality and innovation in terms of what we offer in the shape of warranty to that extent. I think these would be some forays which we look very strongly, which would be different from competition and something which would also invigorate the market very strongly going forward.
Sure. Can you give us a sense on what FY26 will look like, basis what you are indicating, basis the strategy?
So obviously, I think, one of the things which we are looking at is that the urban centers have been a little bit slow as compared to the rural centers, especially the T3, T4 cities have been relatively much better from the urban centers. One, we hope to kind of invigorate some of the demands and the painting kind of frequency which comes in the urban centers to that extent, and which would possibly lead to growths coming in urban centers, growths coming from projects and industrial, as I kind of really painted out. And then looking at FY26 from a point of view of at least single-digit value and volume growths, which would kind of pan out for us. And not only this, from a point of view of margin framework also, For the current year, we have kind of closer to about 18% PBDIT margins in terms of the console numbers as we see it. And I think going forward, given the fact that there are a lot of initiatives which are from the point of view of cost efficiencies and also from a point of view of backward integration in terms of what we are looking at, we are looking at maintaining our guidance in terms of the 18 to 20% from a PBDIT perspective overall going forward.
Well, that's very interesting because, it has been fairly intense when it comes to competition. What have you made of the competitive intensity so far from both new as well as existing players? Because, you've been caught on the wrong side here.
Overall, what we see is that in terms of the overall new competition which has kind of come in, we have not seen any differentiated strategy. I think the products are the same, in terms of what you're offering, the kind of services which are being offered in terms of the material delivery, things like that. There is nothing which is new. It is just everything is in a Me Too kind of a framework which kind of really comes in. And therefore, the only leverage you have is to kind of throw more discounts and look at possibly buying that sale out to that extent, which you have seen in the past from other players multinationals who have entered the Indian market, and where we're finding it that it becomes very difficult to really sustain that kind of thing. You could kind of make inroads for, maybe 2 years to 3 years if you are willing to kind of throw that kind of a money overall to that extent, but to kind of sustain that really and really kind of then upgrading your pricing and looking at possibly, asking the retailers to buy at a normal price would be very, very difficult in terms of how it would kind of really pan out to that extent. Also, what we see is that in a market size of about 80,000 crores, if, overall new competition is able to garner even 4 to 5% overall of the share, it's not a very big share in terms of what you are able to garner to that extent, unless you become a player, quickly in terms of looking at 10 to 15% kind of a share which you are able to garner to that extent. So I think it will take a long time in terms of from a point of view of really bringing sustainability in terms of the actions you're taking, building the brand really in terms of what you want to do. Because what we've seen is that at Asian Paints, it's taken us good 8 decades to kind of really make the brand what we are today to that extent. And therefore, brand building doesn't come in very easy, and it kind of takes that kind of a time and investment which has to be there to that extent. So I think the big question mark is of sustainability is what I'm putting in.
Okay, so does this mean margins are disrupted for the industry for a bit for now?
I think definitely there is some disruption in terms of the overall margins, because if some of the players are trying to play the pricing game, to some extent, possibly the price elasticity would kind of hold up to a certain level to that extent, which is there. So I think there would be definitely some price disruptions. And therefore, I think as strategically, we will have to look at in terms of how we are able to kind of shore up our treasure chest to kind of really fight some of the areas in terms of investments which we need into the market. And therefore, cost efficiencies, how you kind of look at your costing models, how you look at possibly your backward integration initiatives, which kind of gives you more muscle to spend in the market, yet maintain your margins, I think would be the game in terms of what we would like to play.
Amit, in the recent past, there has been an exodus of senior leaders in the company. There has been some leadership changes as well. What exactly does this signify? What kind of changes can we expect to navigate, through these times when it comes to leadership?
So I feel that today, it's always a dynamic environment in terms of what we would look at from a point of view of overall leadership and who's taking the charge and how we are kind of looking at taking the game ahead. But as what we have seen is that today, I think Asian Paints has a lot of battery of in-house people whom we nurture over a period of time, and we give them various exposures across various business and disciplines to that extent. And I think it's always a good idea that we keep on rotating people, giving them exposure. And to that extent, I think what we are proud is that today the internal factory of looking at generating leaders and so on and so forth is so very strong at Asian Paints that we are putting our best people across various kind of businesses to that extent. And going forward, I don't see any tension in terms of the areas in terms of looking at good, capable leadership in terms of what is going to head the business and take it to the next level.
My question, Amit, actually was a very direct one. If you could, tell the viewers, will you continue as MD?
Definitely, I think I'm strongly into the game, and that's something which we want to kind of take it head on.
That's about you. And do you have the board's full support for it, Amit?
Absolutely, fully, 100%.
All right, take that point. Thank you so much for joining in, suggesting that the new competition hasn't been doing anything different other than, discounting its way into the market share. And Amit sustains his leadership right now, has the board's backing as well. But it will be very interesting to see how Asian Paints grows from here on, given the sort of derating that we've seen on the stock and the muted volume performance that we've seen over the last couple of quarters. The management stands by high single-digit revenue growth in FY26 with 18 to 20% margins, with a view that maybe in the near term there could be some disruptions out there as well. Take a short break, come back on the other side. We'll talk about all the market setup as we view it, as there is a fair amount of nervousness, the Nifty around that 24,000 mark.
Welcome back. You're still tuned into Halftime Report. Well, Biocon has reported a better than expected Q4 FY25 quarter with around a 154% surge in its profit. I did catch up with the managing director and the CEO, Siddharth Mittal, and started by asking about the strong recovery in generics this quarter. Listen in.
It's been a very solid quarter this year. We've seen a very solid growth in generics business of 46% year on year and 53% sequentially, which was mainly aided by launch of generic Revlimid in the US. We also had launch of Dasatinib tablets in the US and more importantly, liraglutide in the UK. So a combination of these three led to a robust growth. And Revlimid, of course, has been a product which is important, has contributed to significant growth for many other companies. And we supplied the launch quantity to our customers in the US. And that, of course, a large part of the volume that we had as a part of settlement with the innovator was already supplied. So part of that growth that you've seen was one time or lumpy. But we do have some more volume coming up for sale in next fiscal year.
So what is a normalized growth for the generics business going forward?
See, I'm expecting a couple of important launches next year. Primarily, we are going to launch liraglutide in Europe. We are also expecting an approval of liraglutide in the US and Copaxone in the US. So with these three important launches, we are looking at anywhere like a high teen kind of growth for the next full year. Of course, there will be a ramp up during the quarter. So we might see normalization in the first half of next year. But the whole year, we are definitely expecting a very robust high teens growth.
Okay. All right. The biosimilar segment growth this quarter was around 4%. What was pricing pressure like? And how did key biosimilars such as, say, trastuzumab, pegfilgrastim and insulin glargine perform?
So let me first give the number on a like-to-like basis. If you remember last year, we had disposed of our branded formulation India business, and there was certain licensing income in Q4. So on a like-to-like basis, the biologics had 9% growth this year versus last year. Now, when it comes to market shares, we have seen a very robust growth in products in the US, such as pegfilgrastim, where we are almost at 30% market share. When you look at biosimilar trastuzumab or Ogivri, we are at 25-26% market share. And when you look at biosimilar glargine, we are almost at 18-19% market share of the covered market. And I think that just demonstrates the strong performance by our team in the US, who post the transition from Viatris, we have more than doubled the market share for these products. And we are, of course, gearing up for a few more launches in the coming fiscal in the US.
Okay. What is the update on bevacizumab? You received an approval in April 2025 from the US. Adalimumab, as well as insulin aspart, where you currently, we understand, is under US FDA review.
So adalimumab, of course, was launched, in fiscal 24, but since then, it's done really well in Europe. When Viatris had launched this product, they had gained significant markets, and especially in larger countries such as Germany and France. And we continue to do very well in Europe. But in the US, it didn't work out for the entire biosimilar industry. The ramp up was very slow, and the innovator continued to hold a large market share in the US. And of course, we had a couple of smaller accounts, but it's not contributing a large as far as the US market is concerned. Now, bevacizumab, we received the approval earlier, and now we're getting up for the launch. It should be, we will tie up with all the payers and various customers, and hopefully the revenues will start ramping up in the first half of fiscal 26. And as far as Aspart is concerned, our facility has got cleared, and we are just hoping to receive the approval. We have a target action date coming up in the next 2 to 3 months, and we are hoping that as soon as we receive the approval, we should be in a position to get ready to launch the product, given that there is no other competition at this stage.
Okay, all right. What is the company's plan then when it comes to the larger world of weight loss drugs? You've spoken about how liraglutide was launched in the UK and how it performed. But what about semaglutide? We do understand that it is going off patent in various markets in the next fiscal. How is Biocon taking advantage of that? And what about India as well when it comes to weight loss drugs?
We have a very comprehensive pipeline of GLP-1s. Today, of course, liraglutide was the first drug which was approved and launched. We do have semaglutide in our portfolio. We have tirzepatide in our portfolio. The development is complete for semaglutide. We are filing this product in various emerging markets and developed markets in the coming fiscal. In India, we had completed our bioequivalence study and met the endpoints. We are, of course, going to do the clinical trial, which is one of the important requirements in India to launch this drug in India. And we are hoping that we should start selling this drug in emerging markets somewhere in calendar 26. And of course, there are larger emerging markets and also markets such as Canada, which opens up in 26. Now, that said, we of course know that many other companies are working on this drug, and we know we are very confident of our scientific capabilities, our capacities, and our commercial presence in these markets to be able to maximize the value from semaglutide.
Okay, Biocon Biologics, it successfully refinanced, that $1 billion long-term debt. Give us a sense in terms of what's the eventual plan when it comes to repayment and the timelines.
See, we had taken on a debt or bond of $800 million in September of 2024, which has a bullet payment in 5 years. So that comes up for repayment in 29. Then apart from that, we have roughly $350 to $400 million of debt, which is a combination of long-term debt as well as working capital debt. And this would be repaid after a moratorium of 2 years. So at this stage, there are no bank loans which are coming up for repayment. And I think we have recently announced that we are looking to raise 4,500 crores through a combination of QIP and preferential placement at Biocon level. That the deployment of those funds will be for meeting the obligations that we have for some of the structured equity that we had taken on last year to fund the acquisition of Viatris business.
Okay, that's actually my next question. Timeline of raising these 4,500 crores in terms of funds?
See, we are monitoring, of course, the market's condition, and what we have said is we will complete this fundraise of 4,500 crore in one or more tranches. We expect the first tranche to be complete by middle of June, and the timing of second tranche will be decided after the first tranche is complete.
Okay, so the first tranche could be as soon as June of this year. Any clarity, lastly, on the Biocon Biologics IPO?
Again, we all know the market situation right now. The IPO market is a bit dull, and Our board has in fact constituted a committee to look at all the options apart from the IPO. So we are also contemplating to look at what are the best restructuring options to maximize the value for our stakeholders and shareholders. So including a merger between Biocon and Biocon Biologics. So I think this committee will evaluate these options, and over the next few months, we will decide the best course of action.
All right, that's the conversation from Biocon. But while that conversation was going on, there's an important flash breaking at the bottom of your screen, which is on the back of the military conflict between India and Pakistan. The ongoing IPL, the Cricket Premier League, has been suspended indefinitely amid the escalating tensions. With the conversation coming in from the BCCI officials, as well as the story which has been put out by the PTI itself, and they expect that the IPL for now has been, there was conversation that they were deciding what to do with the future of the IPL amidst this situation, and the priority was to ensure that all the foreign players do return to their countries safely, and all the players who are there return to their homes safely as well. Yesterday's game as well was, called off because of this. We had the stadium which was evacuated, and now we get the news that the IPL for now has been suspended indefinitely. Ekta.
Yes, absolutely. The development comes after the Punjab Kings and Delhi Capitals clash in Dharamshala, which was called off due to those safety issues. So I think there was a little bit of panic which took place in the stadium as well. But nonetheless, as of now, we know that the IPL is suspended indefinitely amid the escalating tensions with Pakistan. To put it into perspective, the FY24 revenue for IPL stood at around 6,797 odd crores, and that has doubled from the previous year of around 3,000 odd crores. So that gives you a sense in terms of the kind of economic impact also that we would probably be facing at this point in time when it comes to the suspension of something which is as big as an IPL product. But this is what we're picking up at this point in time. So definitely a huge disappointment, but it is amid the escalating tension. So I think there was some expectation that this could definitely have happened. The growth, obviously, which we've seen in the IPL from, say, the past two fiscals itself has been because of that increased media and sponsorship deals. And to put it into perspective, the amount which was spent in the 2025 IPL auction was around 639 odd crores. So that's the amount of money which actually went into the auction versus around 557 crores in 2022. So that's the detail that we have about the IPL being suspended indefinitely. More details on that. We need to take a short break, but we have the management of Pidilite who will be talking about their quarterly numbers on the other side. Stay tuned.
Welcome back. There is nervousness in the market right now. We have 2,000 stocks which are declining for every 500 stocks which are advancing right now. So we'll keep an eye out on, the skirmish that has taken place between India and Pakistan in terms of a military conflict that has had impact. And over the last few minutes, we had the flash coming in that the IPL itself has been suspended indefinitely as well. But we have markets to tend to. And one of the stocks which has been doing well right now is Pidilite. That's reported a good quarter, near double-digit volume growth in the fourth quarter, which is the best in the consumer sector so far. To discuss their performance in detail, more importantly, the demand environment amid the uncertainties, I caught up with Sudhanshu Vats, who's the managing director at Pidilite Industries. Let's listen in to what he had to say.
We are seeing a clear improvement in signs in urban as well. And I think this is led by, in our case, I think continued momentum in the construction sector, increased spending by the government, and the hope that that will continue to grow as we go forward. So I think we see a good momentum in urban. From our results, if I was to tell you, rural has still grown ahead of urban for us, which has been the trend for a long time. But urban has grown quite well, and we are seeing a pickup in urban as well.
We saw you amp up ad spends. It's been increased by about 70 basis points as a percentage of sales year on year. Is that to pump prime demand, or is that to spur the rollout of new products that you've done? We're just trying to understand what have you been doing. Has it been a tough sales push for you?
Mangalam, what I would say is that, as you know, that we are a pioneering company. We keep looking at newer segments from time to time. And we also have stated and delivered consistently on our mission of double-digit profitable underlying volume growth. So if you look at, in order to do that, there are two areas where we made spends in the quarter gone by and even in the year. I think advertising and sales promotion, there is an uptick in spends. We are reaching to the higher end of our 3 to 5 guidance in this quarter particularly. And as far as manpower is concerned, you're absolutely right. It's a combination of both. It is one, gearing up for our pioneering categories, and there is some of that which is baked into it. And also, in order to spur demand from the grassroots level, we continue to strengthen our second field force. And Mangalam, as you very well know, Pidilite has a unique go-to-market where there is one field force that goes to the dealer, the other one that goes to the users. As more of our categories become bigger and we see our portfolio expanding, which indeed is the case, we will continue to drive a lot more of this moving forward.
Would you be able to give us a sense? Yeah, would you be able to give us a sense of what category drove the volume growth for you? Was it construction chemicals? Was it adhesives and sealants? Was it consumer products? Because I see B2B growing in mid-teens, and that's been the case for the last few quarters. In the consumer and bazaar business itself, what were the categories that outperformed according to you?
So in this quarter, I think while we saw growth around all categories and segments, I think if I was to point out two of them, these are our growth categories, Mangalam, as you understand, ROF and Dr. Fix-It. So as I could call that, the more construction sector portfolio, which has outperformed the balanced portfolio, although the portfolio has grown overall.
Would you believe that these would continue to outperform in this space itself going forward as well?
So we are very optimistic on both ROF momentum. And Mangalam, as you know, we launched our new campaign, 360-degree campaign on Dr. Fix-It. So on waterproofing part of our portfolio as well, we want to continue to see increased momentum as we go forward. And our campaign last quarter was very well received. It was a campaign with Amitabh Bachchan. But not only that, we had a very good integration with Kaun Banega Crorepati, where you had Dr. Fix-It expert question. And we were there on cricket as well, India-England series. As on the DRS with Dr. Fix-It.
Well, that definitely is showing up in your ad spends as a percentage of your sales. Wonder whether that will continue next year or not as well. The other thing that I want your thoughts on, while you've done near double-digit volume growth, the realization growth or the revenue growth has just been about 8% in this quarter. I say just in context with the volume growth. So how do you expect your volume value mix to move in FY26?
So I think the better way, so you're right, Mangalam. I think the number you are quoting is from our consolidated 8% growth, like for like. I think the better way to look at our standalone results. So if you look at our standalone results, on a 9.8% underlying volume growth, we've delivered in this quarter a 10.2% revenue growth. So the price and volume is now caught up. And I think, therefore, this correlation between underlying volume growth and revenue growth is best understood from our standalone results.
And this is likely to continue, right? Because I believe that raw material prices have largely bottomed out and you are not looking at many price hikes this year.
No, this is likely to continue. So now volume and value should paddle hand in hand. So it should go together.
And B2B, I have to ask you a call out on that because that's been outperforming on a low base for the last many quarters, and you've reset your strategy out there as well. So at some point, do you see higher contribution from the B2B vertical, and does this outperformance of mid-teen sort of volume growth in B2B continue?
So we are very hopeful. This is the 7th quarter of mid-teen performance, as you rightly pointed out. I think with all the growth in India in terms of infrastructure, construction, both residential and commercial, and the way we have geared up for this, Mangalam, through Pidilite Professional Solutions team, I think we are very hopeful of continuing to deliver very strong growth on projects. And even our industrial businesses will continue to deliver robust growths moving forward.
Final question before we let you go. You had said that come summer, we will have an update on the paint industry for you. What's the update?
So I think as far as our pilot is concerned, as if you're talking about that, which is Haisha, which is in the 5 states, All I can share with you, Mangalam, at the moment is we made steady progress. We are very satisfied with the progress that we've made. But in a very classic Pidilite sense, we still feel a little bit more work needs to be done on certain modules, particularly on demand generation, the way we want to go about it in a unique fashion. I think we will continue to do that work and then look at further expansion.
So rollout happens sometime in FY26, a national rollout, or maybe next year is when we see the paints all over the country?
So you have to wait and watch for the space. We got to continue to make a steady progress. But once we are satisfied with all the work which we've done in these 5 states, we will go forward. We are making steady progress, though. I can tell you categorically, quarter on quarter, month on month, we are making progress.
How far are you from being satisfied? Let's ask you that way.
It's difficult, Panglam, to predict a specific time, but we are at it. And with the tenacity and persistence of Pidilite, we will be at it and we will make sure that we get this right.
All right. And double-digit volume growth with 20 to 24% margin band stays for the entire year. That's what you continue to strive for, right?
Yes. We continue to deliver double-digit profitable underlying volume growth.
All right, we take that point. Confident sounding Pidilite, confident of urban growth coming back on the back of consumption as well. We'll take a short break, come back on the other side. We keep an eye out on what's taking place at the border, India-Pakistan tensions. We do have a guest joining us.
Welcome back. Well, definitely tense moments for the markets as well. So currently we have the Bank Nifty, which is down around 1.3%. We have the mid-cap index, which is down around 0.5% as well. Advanced decline ratio weak at around 1:3. A lot of stocks, say ICICI Bank is currently the top loser on the Nifty, down around 2.8%. Titan's doing well, so that stock is up around 3.8% and giving it companies L&T, which is up 3.5% at this point in time. Tata Motors seeing follow-on buying, so that stock is now up around 8% on a week-to-date basis. But the big story, India responds strongly to Pakistan's aerial attacks on several locations in northern India, and while many hope for a de-escalation of tensions, the nation remains on high alert and ready to retaliate. CNBC-TV18 has been bringing you opinions from top market voices on how the ongoing conflict can impact the markets. Listen into some excerpts of those conversations.
When it comes to the stock market, I think it's only natural to expect there's some volatility during this time. But as you said, markets globally, where you've had such situations, the wars have not tended to have a lasting impact on the market. In the short term, depending on how long the border situation lasts and how tense it gets, whether it de-escalates or escalates further, can have the logical impact. We tend to be fully invested as we are today and remain fully invested. We don't raise cash. If we have any cash, we generally use such opportunities to deploy. But at this time, we have normal levels of cash, which is around 1% in the portfolio.
It seems a lot more concerning. I mean, I think that things are escalating. And frankly, the Pakistani military chief, General Munir, is known to be a bit of an Islamist hardliner. So when we look at the facts, I don't think the civilian government is in control in Pakistan, as it has never been in times of crisis. The reality is that in the past, with a different government, U.S. would be more aggressively trying to play a role in trying to de-escalate. Since this is more of an America First, leadership, they're taking a hands-off role in this. So therefore, I'm not sure who is going to be able to, put pressure to de-escalate, and if there is an external pressure, is there a risk of some miscalculation? So I think that the markets are probably going to continue to see pressure because things do not seem to be settling now.
The only submission to investor will be, don't fall to the propaganda, don't fall to the disinformation. Follow your asset allocation dharma. our long-term growth story remains fairly intact. And if this war is limited to limited conflict, then probably every correction is a great opportunity to buy. We need all the global allies to come together and pursue Pakistan that this policy of terrorism, this policy of 1,000 cuts bleeding is not appropriate. If we can get a diplomatic solution, undoubtedly it is good. And we will need all the allies to come together. But at the same time, we'll have to keep on also putting pressure in terms of our non-escalatory responses so that finally Pakistan realizes the error of pursuing the policy of terrorism. If we look at near term, the March 25 quarterly results so far has come ahead of expectation. Good results come first, bad results come little later. But overall, the March 25 quarterly results are well ahead of expectations so far. More importantly, foreign portfolio investors have started buying. They became buyer in the month of March from passive side. April was largely passive and little bit active. But in the month of May, we believe it is more driven by active investors. It's a vote of confidence on Indian economy and Indian market, despite this kind of geopolitical situation.
That's about the impact of Operation Sindoor on portfolios, but where does it go from here on? Air Marshal Anil Chopra, who's the former Director General Center for Air Power Studies and Strategic Advisor, Aerospace Society of Indian Defence Manufacturers, joins in. Thanks a lot, sir, for joining in. And, logic would have said that maybe by now there should have been de-escalation. Where do you see this situation going from here? What are the probabilities that you ascribe to this escalating further? What are the options on the table on either side?
Manglam, day 3, Operation Sindoor. I think it was a firm leadership, great decision, decades of terror. There was time to punish. We have been, as a nation, very, very careful. We did Uri in 2016. It was just a cross-border strike by the army. Then we did Balakot, which is a deep strike by Air Force. And now we have Sindoor, where we have gone for 9 targets, 24 missiles on day 1 to hit terror targets. Very responsible country. We haven't hit the civil targets even today. Of course, military targets we had to hit yesterday, and we perhaps may have to hit further because Pakistan escalated. They responded to our attack on pure terror targets by hitting our cities, a large number of them, right from J&K to Gujarat, all across the country. And thereafter, they've been hitting military targets last night. Failed attempts. Our air defenses have been very strong, and we have been able to knock off the threat. Yes, nobody wants to escalate. India is a peace-loving country, but as I said, that we have to teach terror a lesson. We have used both non-kinetic and kinetic options. Non-kinetic have been going on. Diplomacy, we have done the Indus Water Treaty we have put on hold. There are other diplomatic actions we have taken to get all the friends, even the Pakistani friends like Saudi Arabia and UAE have supported India on this count. So there has been a lot of action going on. But yes, moving forward, things are still not settled. Cross-border firing is taking place. Artillery shelling is taking place. Many civilians have died on both sides, including India. We had to evacuate some of the villages. So have they had to do. But hats off to the Indian Armed Forces, a befitting response. When they started hitting our military targets, we had to take on their air defense targets. We hit Lahore air defense system, their HQ-9 air defense missile. We hit their radar. The videos are in the public domain. And therefore, there is right now, at this very moment, there is a relative calm on the LC, as we hear from the media reports, from reporters who are already there on the Kashmir, POK border. But anything can happen. We are still, to come to terms. Time that Pakistan apologizes internationally for the terror support, gives a commitment to the global community that they will not support terror at any cost, and maybe that will be one of the reasons how we can de-escalate.
All right. So, we just got the news with regards to the IPL being suspended. What would your reading be into that piece of news from a defense perspective?
I personally feel that as a nation, we all have to stand by with the people in uniform. There will be some people who will be hit. There'll be some level of suffering for the families and the people who may die. So therefore, on many counts, the country has taken a call. The Prime Minister ordered 2 days back to have the entire country to go through, drills, home guard drills, so that, in case of an attack, the whole country has to get involved in this exercise. Mind you, our stock exchange is still doing very well. Pakistan stock market fell 7,000 points yesterday, the worst drop ever, and they not only fell, they had to close the stock market. Pakistan is in a bad state economically. If this conflict was not to stop quickly, they are the ones who will run out of money very much faster and ammunition. So I think our decision to call off IPL is it's an emotive decision. The country wants everybody to stand by with the armed forces.
All right, just a quick question, sir. What do you think is taking place behind the scenes on the diplomatic channel at this point in time? What role are the global powers playing as of now? And would that be enough to influence the next steps that we might see?
Officially, Vice President Vance has said, U.S. Vice President has said that, they will not like to get involved because they know this is a long ongoing, issue between India and Pakistan. But I'm sure at back channels, they are all talking. The Russian President Putin, has supported India, and so have many other countries. But I'm sure back channel people are talking. Our External Affairs Minister, Jaishankar, is spoken to everybody. Every day he's speaking to somebody or the other, updating them on what we are doing, and that we are not the ones who are escalating, and that we are trying to only hit terror targets. If the Pakistanis are going to continue to escalate, then we will perhaps hit more terror targets. And yes, back channel actions are on. Nobody wants, it's not good for any country to have a continued war. And some solution, I'm sure, will be found in the near few days. Yes.
Take that point. Thanks a lot for joining in, sir, and giving us your perspective. But earlier today, we also spoke with the former diplomat and strategic affair expert KC Singh and Air Marshal PS Ahluwalia about the simmering tensions between the two nations. Let's hear out what they had to say.
What we can see is that today, while this diplomacy is on, there is a window, there's a narrow window available that public opinion on both sides is satisfied. Pakistanis will tell their people, look, we hit so many missiles and drones, and the Indians are on the back foot. We, of course, know what our defense ministry will say and what our point of view is there. Normally, you get to ceasefire when each side can claim, take away something which is a bit of a win, right or wrong. But that is the claim that they have to sell to their public opinion. So I think we have a narrow window before actual escalation, which means missiles are fired or troops start crossing the land border or the LOC. Before that happens, now on the table is Pakistan has terrorism, which it has to control, and India has got the water weapon. Marco Rubio, as we know, is also the NSA. He's got more and more power, and therefore I think for pragmatic purposes, President Trump is relying on Rubio, whereas for making noise and taking extreme positions, Vance comes in. So we should pay more attention to what Rubio is doing. Rubio has said we need de-escalation now, which means the Saudis are talking to both sides. They're doing it obviously in tandem with US. And US has this lever. They can stop the IMF loan. We can't stop it. We can make noise. But essentially, it's US that can stop it. Now, that lever would probably be in play. And that is why I said the whole of today is important.
Will be effective here is that we carry on hammering these guys. We carry on hammering them till we get them to bend their knees. And once that starts to happen, then we'll be able to dictate our terms. Nobody wants an escalation. Nobody wants to get into, long drawn-out conflict. Certainly not. But we can ask them or we can force them to bend their knees. Then they'll come on the negotiating table. And that's where we can dictate terms for de-escalation as and when it happens.
All right, well, we need to take a short break, but on the other side, Manisha Gupta will join in and she's going to be focusing on cryptos. Stay tuned. Welcome back. Well, for the markets, still under pressure. So we have the Nifty, which is down around 200 points plus. We have the Sensex, which has lost around 750 odd points. I just want to point out that stocks such as Dr. Reddy should be in focus. Is just about marginally lower, trading with a cut of around 0.3%. Comes out with numbers today. So do watch out for that particular stock. In terms of a couple of stocks moving on the upside in terms of volumes, just watch out for Yes Bank because that is humongous amount of shares traded on that one. So it's a volume and price mover at this point. So that stock up around 6.5%. And a lot of the defense stocks are in focus today. So Paris Defense, for example, is up around 5.6%. Mazagon Dock Shipyard up 4.5%. But let's now shift to the commodity space. Manisha joins in, and today we're focusing on cryptocurrencies.
Well, as the markets continue with more and more concerns growing and another escalation continuing between India and Pakistan as well, we are looking at geopolitics, economic data, and then these escalations continue to, in some sense, support buying in case of cryptocurrencies. Overnight has been one of the largest gains that we've seen in months. So we're looking at nearly 3-month highs for many of these cryptocurrencies there. When you look at the global crypto markets, well, they have gained up by 5.5% to a capitalization of around $3.34 trillion there. As of now, 16,900 cryptocurrencies are trading, but it is about the top 10 of them, and they have done exceptionally well over the midnight there. When you look at the Bitcoin prices, we're trading above $100,000 right now. Bitcoin has hit a record highs of around 109,000 in the month of January. We also saw a low of around 74,000 in the month of April. So it has been a very sharp up move that we've seen in the matter of last 3 or 4 weeks. Well, to begin with, US also has announced trade deal with UK that has been supportive. We've also seen pro-crypto stance coming in from Trump administration. There is strong buying that has been reported from spot ETF markets there. Investors, institutional inflows into crypto has been on the stronger side. And then rising tensions, as I said, between various countries, the latest being India and Pakistan, also has led to a lot of Asian buying happen in case of cryptocurrencies. Well, accelerated global adoption has been another thing. And then the US-backed stable coins right now dominate with nearly 98% of a market share. So that tells you on where the story really lies. Well, going forward as well, the markets are bullish because of the US policies. We have seen legislation passed nearly 2 US states to allow Bitcoin strategic reserves. And then US banks also are in sense of approving trade custody of crypto assets. And then the Ethereum Pectra upgrade also has led to gains coming in for Ethereum, the largest across cryptocurrencies there. So if you look at the last 24 hours, we've seen Bitcoin gain up by 5%. Solana, XRP, Dogecoin, Shiba are all up between 10 to 12% as well. But it is Ethereum which is up by 20%. In the last 1 month as well, Bitcoin is gained up by 29%. But Ethereum, Solana have given you returns of like 40 to 45%. When you talk about the outlook then, it is about Stancy talking about $120,000 for Bitcoin in this quarter itself. You have Bank of America, Benzinga and Bernstein also trading anywhere ranges between $130,000 to $200,000 in the year 2025 itself.
Okay, all right, Manisha, thanks very much for that. Well, just want to point out that Intellect Design, in fact, came out with its numbers in Intellect Design Arena. That stock is up around 2% at this point. It's gained 8.5% on a week-to-date basis. So just watch out for that. It came out with its numbers and it was a good over 80% revenue growth. Or rather on the profitability. So just watch out for Intellect Design. But nonetheless, on that note, it's a wrap on Halftime Report. Business Lunch will take all of the action forward. Thanks for watching.